Hello, everybody. I hope you guys are doing well. I hope you guys had a wonderful trading week last week here. My name is Richard Adjei, and I'm the co-founder and head trader here at Trading Rich. Yesterday was a fantastic day for us, those that are part of our community and those that trade with us. Yeah, we seen market sell-off, and this is not surprising to me. If you lost significant amount of money, sorry to hear about that. But I have been those that are part of our community know that I've been warning about this, that the market is overvalued, and also from a technical standpoint, right? So I use the technicals, right? So the technicals is everything for me, right? Technical analysis. Technical analysis have changed my life, right? So I want everybody to spend time to learn about technicals. It's the only thing that doesn't have gray areas and confusion. You can depend on the news, you can depend on social media, you can depend on the hype, you can depend on all that stuff, right? It's just technical analysis is clear cut, black and white, right? So what happened in the market? Why was the market sold off? So again, in September 30th, I did a masterclass and I talked about what I was expecting for October, right? I was saying that in the masterclass. So if you've not seen the masterclass, join our community, and in our free community, you're going to see the masterclass video. So in the masterclass video, I talked about the main theme for the masterclass was final rally or big crash, right? So basically, the summary of it is that in the month of October, I was expecting a pullback because the market is too extended to the upside. It cannot continue this way, right? Because that is not healthy for the market. And to make matters better for the market, for the bulls, what happened was that we had a government shutdown. And because of the government shutdown, there was no economic data being released. So it means that the market was trading blindly. So the market was being held up by news by AI news left, right, center. On Monday, we got a news that OpenAI is investing 100 billion into AMD to get 10% share of AMD. And that caused AMD to rally. And we know, as the saying in Wall Street, as the semiconductors go, so does the market. So on Sunday's live stream, those that joined, our thumbnail was this. This was our thumbnail. So our thumbnail was big volatility, right? Because I was already expecting the market to sell off, right? Some kind of pullback, some kind of sell off, right? Again, it's based on the technicals, right? So the technicals tell us what is about to happen, reveal this to us before it happens. I don't need to know about what the news is. It doesn't matter to me. If I know it, that's great. It's just an additional confirmation. So just note that technicals reveal what is about to happen before it happens, and the news just confirms it. Do not be a news trader, be a technical trader, right? I can't emphasize that much, right? Because I really see people, they jump on social media, they hear all sort of things. This is going up, going to the moon, going to the moon. That is what causes people to lose significant money in the market, and they get wiped out, and they don't come back to this market, right? I have learned my fair share of that when I didn't used to use technicals. I was just like every other person that goes on the internet, listen to YouTube influencers, and all sort of things, social media guys, buy this, buy that, but what it is. So take your time to learn the technicals. That's what I'll say. Okay. So why did the market sell off? So the market sold off because, first of all, from a technical standpoint, I'm going to show you guys what it is in this video and why the market sold off. I mean, we're waiting for this for some time now, so it's not surprising to me. Like, it's just a confirmation of the technicals, right? But apart from the technicals, which we are going to work on after this, what caused the market to sell was that China imposed export restrictions for rare earth materials and also other materials that is used for setting up manufacturing semiconductor chips, right? So if you look at the news here, I'm going to share my screen here. You see rare earth stocks surge after China tightens up grip on global supply. So China has these rare earth materials, and basically this is needed for semiconductors, right? To manufacture semiconductors, these are needed, and other materials as well. So they're blocking the exports of these materials. Okay, and that is something that the US administration was not happy with. And they also came out and said that, and they also came out and said that that Qualcomm is a semiconductor company. One of their largest markets is in China. They say that Qualcomm has monopolistic tendencies, right? They are monopolizing the market, and they filed a lawsuit to the World Trade Organization, right, about it being a monopoly kind of thing. So that is something that so Qualcomm is an American company, and so this made the president of the United States mad because we have to remember that the China-U.S. tariff negotiations has not been finalized, has not yet been finalized. They are still negotiating, right? So the U.S. president is supposed to be traveling to China to meet the Chinese counterpart. So President Trump got mad. He went on Truth Social and wrote a whole book long of tweets. So if you're not following President Trump on Truth Social and you're an investor in the market, you are shooting yourself in the foot. You need to follow President Trump on Truth Social. I don't care what your political affiliation is. When we come to the stock market, we put politics aside, we put everything aside. We are here for business, and we have to be professional about it, right? In business, sometimes you have to work with people that you don't like, right? But you have to keep it professional, right? So it doesn't matter what it is, right? I'm not for any president. I'm neutral, right? I'm a technical analysis trader and an investor. So wherever the information is, I have to go for it to help me solidify my trade thesis. Okay. So make sure if you're not following President Trump on Truth Social, make sure you do so and set your alert on all notifications so that immediately he tweets anything, you can analyze it. If you don't know what it is, you can put it on the AI platforms like ChatGPT and let it interpret it for you and let it tell you how it's going to impact the market. Okay, so those are the things. So here, President Trump says, you know what, the China trip, I'm even going to cancel it. I'm not even going to meet with President Xi anymore, and we are going to go ahead and impose 100% tariffs on China, right? In addition to what has already been imposed on China. So he went ahead to say that, and that caused the market to sell off. Because remember, the market knows that one of the reasons why the market sold off in April was due to tariffs. And throughout those times, like the billionaires like Bill Ackman came out and mentioned that, hey, Mr. President, can you have a 90-day period so that you guys negotiate to figure out the whole deal so that we can get things rolling in that way, like the market is not just waiting, right? So when they did that, the US president and the administration came out and said, hey, we are going to have a 90-day pause in tariffs, right, while we negotiate. So throughout that period, there have been deals that have been done with different countries, Japan, other countries, and stuff like that. But the one with China is not done yet. The one with China is not finalized yet. So the plan was for President Trump to go to China, speak to the Chinese president, get everything finalized. And part of the deal was the rare earth material, because that's very important for semiconductors. Well, because semiconductors are very important materials. Without every electronic that you know about has semiconductors in it. This computer I'm using, any electronic computer devices, cell phones, semiconductors are very important. So if a country that has supply of rare earth materials and other materials that are important for manufacturing of semiconductors is blocking it, then you know that it's going to affect certain companies, right? So again, China likes to do that sometimes. It's like a negotiation tactic, right? But I believe that when all is said and done, cooler heads are going to prevail and they are going to find a deal. So I mean, nobody wants to. China does not want, like, a lot of tariffs. Nobody wants confusion, and also the president does not like to see the stock market sell off, right? So that's something that he wants to do. So we are going to see what happens in the days and weeks ahead here. But I just wanted to let you guys know about what caused it. That's the news part, right? But before the news, we saw what was about to happen in the technicals, right? So with technicals, you don't need to know what the news is. The news just confirm what the technicals is. That is why it's powerful. Like, it's not 100%. There's nothing 100% in life, but technicals puts the probabilities in our favor. 80% probability in our favor. So it's better to have 80% probability than to have zero, right? So, and then you can put two and two together, add the news to it, you can make an informed decision. So your take home message from this video is that if you are a type where you're not using technicals, please make sure you start using technicals. And if you join our community and you sign up for our programs, you are going to learn about technicals. Okay. So now let's go to the charts. What is the chart telling us? Okay. So let's go to so I'll first go to the S&P 500. So I've had this chart, and I talked about this chart here during the masterclass in September 30th. And also I did a video on Thursday, which talked about big rally or sell-off, right? Rally or sell-off. I talked about that, right? Because I wanted to put that video out because I saw something on the charts specifically for the DIA. That's the ETF that tracks the Dow Jones Index, right? Dow Jones Industrial Index. We are going to go through that shortly here. So over here, I see that we had this. I've been talking about this channel, this parallel channel, for a long time. This is the reason why I love technical analysis. Like, you don't even know, like, this is because this removes confusion. This removes hype. This removes all sort of nonsense, right? It gives you everything that you need to make an informed decision. Okay, so let's look at this from a bigger time frame. So this is the SPY. That's the ETF that tracks the S&P 500. Okay, this is called a parallel channel. Okay, parallel channel. It's basically, it starts with a trend line, right? So a trend line, basically what you do is that you pick pivot low. So this is a weekly time frame, is a bigger time frame, so that we can condense things and look at where were the major lows in the market. So one of them is a major lows are usually important events in the market, right? So we have COVID low. So you have a trend line, you connect it to COVID low, you connect it to 2022 bear market lows. Why did we get a bear market in 2022? Is because of high inflation. So the Fed had to use its tool of interest rates to the hiked interest rate, increase interest rate, because interest rates was at zero. So they had to increase interest rate to fight inflation, right? So that caused the market to sell, and we got into this low here. This was October 2022. And then we also got another sell in the market in October 2023, right? So, and then from there, we were able to rally to all-time highs and end the year on the high notes, okay? So here we have October lows, and then we have the Liberation Day or Trump tariffs lows, right? This is when the U.S. administration imposed tariffs on all countries across the world. In 2018, it was between U.S. and China. But this time around, it was everybody, all countries across the world, right? And this caused the market to sell off significantly, right? Until cooler heads prevailed, right? So when cooler heads prevailed here, when they say you are going to have a 90-day pause for negotiation, right? It's important to pause for negotiation because negotiating tariffs takes time. It's not like something that you can just do in one day, no, because there's a lot of things that goes into it, right? So when the billionaires, you can go check out Bill Ackman. tweets, right? He was tweeting to the president, and it's like because they all those guys contributed to Trump's presidency, like in his campaign. So he said, Mr. President, because he's a billionaire, he's also suffering in the market sell-off, right? Say, hey, Mr. President, please, can you have a 90-day pause whereby you guys negotiate? That is why the market reversed, and Trump came out on the 9th, April 9th, and said this is the best time to buy, right? That the market is going up. But before then, members of our community, I told members of our community in our April 6th masterclass that the market was going to bottom the following day, right? And on April 7th, I came out and said, this is the bottom, this is the time to buy every single stock that you like. And where are we now? Because we are going back to all-time highs. Why did I do that? I did that using technicals, right? Technicals, pure technicals, right? So I want everybody to understand how these technicals work. So here we have COVID lows, bear market of 2022 lows, 2023 lows, and then Liberation Day low. So if you pick, so parallel channels, I connected these two, these are trend line. If you move this parallel, right, move it up like this, you bring it here, where does it end? So here, this is, you push it to the highest point, right? Highest point in time, which was January 2022. And this. So even if somebody that is not even a trained technician can tell you that, okay, I see what is happening here. Anytime the market or SPY comes to this area, what did it do? It bounced, right? It bounced, right? It's bouncing and stuff, right? It's acting. So this bottom trend line is acting as support, right? And this one here is acting as resistance. Resistance is like a ceiling, right? In your room or your house, the ceiling is the resistance. In the floor is your support. Okay. So and where did price go to? So price what came here again, this area, right? This area. So based on what I've seen here, the thing about technicals is that what happened in the past can happen again in the future, right? Because the last time price came here, what did you sort of here? This is where we are at. Okay, so that's one factor. Okay. The second factor was this trend line. I've had this trend line on my chart for the longest time, right? Second factor was this trend line here. So from the 2023 lows to this, connected to this, and you push it up here, it goes into the top here, right? So I've been saying that SPY has two jobs to do. In the video that I posted on Thursday, SPY had two jobs to do. In order for us to go higher, SPY needed to break above this trend line, right? So this is a 2023 trend line. So it's a 2-year trend line, right? So I call it mother of all trend lines, right? I gave it a name, mother of all trend lines. So a trend line that has lasted a long time. So long-lasting trend lines take a long time to break, right? So and in my masterclass, I say that as long as we don't break below, if we break above this trend line, then I'm bullish, right? If we break below it, then I'm going to be bearish. Okay, so here, let's look at it. Apart from this trend line, we have this mini trend line. So this is called primary trend line. This is your secondary trend line, right? So again, this is the weekly. Let me go to the daily for us to stretch it out, right? For us to stretch it out. So here we have this bottom trend line here, right? This bottom trend line here, it goes, so again, it goes from this date. This was May 23rd, and here, so and June 25th. If you stretch it out, you are going to see that SPY has been testing this. This was the first time, second time, third time, fourth time, fifth time, seventh. In technical analysis, numbers 3 and 7 are significant, right? In this video, I'm going to focus on number 7. In life, actually, number 3, like number 7, is very significant, right? Because it's significant in many terms, right? In creation, right? In creation, God used 7 days, right? Creation, right? If you're a Christian and use the Bible, it's 7 days, right? In astronomy, there is something called the 7 celestial bodies, right? In the Fibonacci sequence, there's number 7 in there, right? So in Buddhism, right, there is what is called the 7 factors of enlightenment, okay? And in Islam, there's 7 earths and 7 days of creation and heavens, 7 heavens, right? In the Native American traditions, right, there's also the number 7 represents world order to the fullest. That combines 3 vertical worlds with 4 cardinal directions, right? So there are many instances where number 7 is very important, right? So I'm just bringing in other things. So in technical analysis, if you don't learn anything from this video, in technical analysis, number 3 and 7 are very significant. So what happened here? Again, number 7, boom, and we saw this breakout. So again, one thing also about technicals is that this is a support level, right? So imagine a support level as a brick wall. Let's say you are breaking a brick wall. You use the hammer to hit it once. Nope. 2. Nope. 3. Nope. 3. You were 4. You were not able to break it. 5th one, you're not able to break it. 6th one, you were not able to break it. Now 7. So the more hits this gets, the weaker it becomes, right? So because this has struggled to break it several times, next time when it comes in, it's going to come in with a bulldozer, right? It's going to come in with something strong to crack it, right? So that is what happened here with the SPY. Okay, so this is what we saw. So we got a flash. So when the news came, it was already primed to perfection because the market has been in a state of complacency, right? Later on, we are going to review the VIX that tracks volatility, right? So the market was in a state of complacency to the extent that it's so perfect that nothing is going to happen to it. And also to make it, to add the cherry on the cake, is we don't even get economic data right now due to the government shutdown. So the market is just floating. The reason why the market was floating the last couple of days before Friday was that everything was AI. News came out that OpenAI had invested in AMD, and it caused AMD stock to jump up by 30% over during the day, right? And then you have also AI news here, AI news there, AI news there. So everything was, there's euphoria in the market, right? So this pullback is healthy for the market. If we had economic data coming in, we would have gotten the pullback. The reason why it has delayed is that because of no economic data. Because right now the market is watching the jobless claims. We haven't been getting any jobless claims for the longest time, for the last 2 weeks, right? We don't even know what is happening, right? And now there are threats from the Trump administration that they are going to lay off the the federal government workers who are currently at home now due to the shutdown. They have plans to reduce the size of government, and a way to do so is that they want to lay them off permanently, right? If that happens, what's going to happen is that it's going to cause so it's going to cause the economy, which is already looking weak from the labor standpoint, breakdown, right? And it could lead to a recession. We are not there yet, right? This year is just a pullback in the market, and I believe that the market is going to make new all-time highs after the pullback. The pullback is necessary. Okay, so now that we have all this information, so now you know why the sell-off came, and it was ready. And the technical showed us this several times, and I've been talking about this several. So this is not new. This is not a new video. This is nothing new, right? And we expected it. Even in our thumbnail for Sunday's YouTube live, the thumbnail talked about big volatility question mark, right? Because we had to discuss with my team what to use and stuff. But this was the reason, right? Because the market was primed to perfection, and any small bad news, right, will cause it to sell, right? It was just like that. So now let's look at where the market is heading next, right? Like where the SPY is heading next. So for me as a technician, what I look at patterns. Okay, patterns is everything. Okay, so now I'm going to a chart where I'm putting in my indicators. Okay, so this is the red line is the 50 SMA on the daily, right? So you see that price has come all the way here, and then what did it do? It held. Okay, so more importantly, I want to check out the weekly chart. There's a pattern that I've seen on the weekly chart, right? So as a technician, what I do is that I use patterns and technicals to figure out where price is going, right? And I use that with an 80% probability. So over here, if you look at this, right? When was this? Was the week of this is the weekly chart, by the way. This is the week of June 23rd, right? So you see price came here. What did it do? It held, right? It held. This is the 9 week exponential moving average. Exponential moving average 9, but on the weekly time frame, right? So you see price came here, it held, boom. Price came here near to this, it held, boom. Price came here, it held this, boom. And now where is it? So based on this pattern here, we might get a bounce next week. All what needs to happen is for President Trump to, over the weekend, talk to the Chinese counterparts, cool off, and everything is going to be fine. And then even yesterday evening, we had news that I think they were asking President Trump some questions, and he said, "No, I'm not canceling. I'm not saying. I'm still open to meeting with President Xi and stuff." So you see that cooler heads are prevailing. So by Monday, we might see that, okay, maybe Chinese counterparts contacting the US and US all that stuff, and then they can say, okay, the meeting is still on, we are going to negotiate, that kind of thing. So what I'm watching is that for Monday or for next week, if we break below this level here, this 9 EMA level on the weekly, then we are heading down. Then the next area is going to be here, right? But if it hasn't broken, it means that we can reverse. Okay, we can reverse to the upside. Okay, so this breakdown has not been confirmed yet. In 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 the short term, we got that bearish engulfing candle, but in the medium term, it hasn't confirmed yet. So we need another red candle next week to confirm that, right? So on the daily, if you go to the daily, this has come to the this is the 50 SMA on the daily. So we need a confirmation, right? We need another red candle to the downside to confirm this breakdown, right? On Wall Street, there's a saying that failed breakdowns or failed breakouts, right? And the reversals can be very devastating, right? So in this chart, I'm going to show you other examples why failed breakdowns and failed breakouts can be very devastating when the reversal comes, right? So here we could get that kind of move where a reversal comes. So this is going to be called a failed breakdown if the reversal comes, right? But if we get a confirmation, we are going to get what is called a confirmed breakdown, right? If it was going to the upside, it was going to be a confirmed breakout. So that's very important. So there's breakout and there's confirmation. So that is something that technicians have to know and understand, because if there's a reversal in a breakdown, a failed breakdown, is very devastating, right? It's going to be crazy. It's just going to move. We could get a weekly candle or a daily candle that comes and wipes out this. If we get a daily candle that wipes out this entire sell-off, then you know that we are moving up straight, right? We are moving up. Okay, so where do I see the market, the SPY going if this sell-off continues? Where is the next level? So where my next level is going to be. So I'm looking at, so I've been talking about a possible 10% correction for some time now. I believe we are going to come here to the previous all-time highs if this sell-off continues. Okay, so previous all-time highs will now, let me use my measurement tool here to figure that one out. Let's see. So that's going to be, so that's about, from where we had from here to this place is about 9%, like close to 10%. So in the market, any pullback, like anything that is like 2%, 5%, anything less than 10% sell in the market from recent highs is called a pullback, right? So what we got yesterday was a pullback. So yesterday was it was like 3%, is it? Okay, so it's yesterday was a 3% pullback in the market, right? So if we get more downside from here to this area, this is where I see the SPY or the S&P 500 bouncing, right? Because this is the previous all-time highs from February 2025. Okay, that's what. So now we can get a 10% correction, right? 10% correction is not a bad thing because it's long overdue. It was expected in September, but we did not get it. Usually, if we miss September, it usually happens in October, right? And if you look at, I analyze the chart, if you look at the V-shaped recoveries, right? Even from COVID's V-shaped recovery, we got a pullback in October, right? We got a pullback in October, right? So, and I don't think we got a pullback in October, and we are getting a similar one. We could get a similar one here. It's not done yet. It's not confirmed yet, right? So we need the another daily candle to close above here, right? Close below this sometime Monday or Tuesday, and then we are going to confirm to the downside, right? It's going to take some time, but if we continue selling, this is the target. This is where we are going to see a reversal, and that reversal is going to take us to new all-time highs, and we're going to go into November. And if earnings are good, we're going to rally. And then as we rally, we are going to get into December Santa Claus rally, close the year on a high note. But in 2026, that is when problems might start happening. If the economy continues, the job numbers get worse. If the job numbers do not crack and get worse now, I mean, it's showing signs of crack. That's why the Fed is cutting interest rates. If it becomes worse, like we get jobless claims of 300,000 a week or more, that should tell you that the U.S. economy is in recession zone, right? If it gets to a recession zone, then we expect the market to sell off, and we are going to go into a bear market, right? So so we shall see how that plays out. But for now, I follow the charts. I'll let the charts guide me. I understand fundamentals, I understand macroeconomics and all that stuff, but I let the charts guide me, right? Because those things take a while to develop. Things to do with fundamentals take a long time to develop. So I look at the charts and let the charts guide me. So here, this is the next area that we are looking at. So if the sell-off continues, we are going to come back here. Okay. All right. So now let me go to the NASDAQ, the QQQ, right? The QQQ, that's the ETF that tracks the NASDAQ. Let's look at it. So QQQ, where are you? So here we have QQQ. So here, this QQQ. Beautiful. Okay. So with QQQ, yet again, so this I'll show you an example here where we talk about. So this is the QQQ chart. This is the index that tracks the ETF that tracks the NASDAQ QQQ, right? One of the reasons why the market is trading at extreme evaluations is because of tech and AI, right? Last time the news came out and they said that one of the reasons why the US economy is not even in a recession now is because of the AI, right? 90% of all capital expenditure from companies has been in AI. So that should be scary, right? Because that's what is holding the US economy now. If that 90% or that AI trade fails, it's over, right? If the AI trade fails, it's over. So we are going to look at it. So from a technical standpoint, let's look at this, right? So yet again, so this is the weekly time frame. So we have here a significant time in history, important time in history, which was the March 2020 lows. This is March 2022 lows here. And then if you extend that trend line, it touches the July 2024 highs and December 2024 highs, and then brings you here. Okay. So I'll go to the daily. daily chart and show you what's happening there. So that's trend line. Again, this is another example of what I call mother of all trend lines. This is a 5-year trend line. 5-year trend line. It takes a long time to break it, right? It's very strong. It's like a brick wall or a wall built with steel. It's difficult to break it. You don't just break it just like that, right? There's going to be a big fight because there are a whole bunch of guys who have, there are a lot of bears that have put their order here looking to short this. And they've been waiting for a long time, right? And so what do we see here? So this trend line. So again, price 1, 2, 3, 4, 5, right? So over here, we can see that this is an example of a failed breakout, right? Why is it a failed breakout, right? Let me explain to you what is failed breakout. So this is a failed breakout. So here, you see that price came, popped, and traded above this mother of all trend lines, but it did not get the job done, right? It did not confirm. Confirm means that we needed another green candle to trade above this all-time highs. It didn't. It failed, right? So that is what is called, that's what on Wall Street is called failed breakouts. Reversals are very devastating, right? Because that means that these guys are going to come with vengeance. They're going to come with a bulldozer to break out that wall and go. And guess what? What happened? This is what we see here with this bearish engulfing candle, right? In those that have taken our course, we call this a clearing bearish engulfing candle. Typically, clearing bearish engulfing candle is the type of candle that clears at least 5 days of action or 5 candles preceding it, right? That's called a clearing bearish engulfing candle. So these candles typically have a 90% follow through rate, meaning that you are going to get more red candles to the downside, right? 90%. It means that there's a 10% chance that it might not work, right? So this is one of the reasons why this sort of, right? This NASDAQ sort of, and NASDAQ is a tech heavy index, okay? So let's use the concept of parallel channels here again. And let's see where price is going to go if we make a recovery sometime soon. Okay, you move this, use this parallel. Again, you come touching the bear market lows, liberation day lows. This is where it's going to go. So here on Thursday, I made a video about this as well, and this is where we are. So if price is able to come back and break out above this pattern here, this trend line, and this rising wedge pattern, then we are going to get a break to the upside, right? And we are going to go to the upside, and we can close QQQ here around 658 or something like that. But for now, we are in for a correction. Okay. All right. So in terms of the sell, let me go to my chart with indicators to show you where the sell is going to go, like where's the next target, next place where price is going to come to. So first of all, let's go to the weekly. Same thing that we did with the SPY, we are going to do the same thing with the NASDAQ. So you see that the NASDAQ has been the strongest index so far due to AI and due to stocks like NVIDIA, right? So due to AI and semiconductors, right? The chip companies, right, have been holding on this market, carrying it on these broad shoulders. So you see that the QQQ, even though it's sold off, it has not even touched the 9-week exponential moving average. So it's a weekly time frame. This is 9, right? So this is a 9-week exponential moving average. So if you look at this, you are going to see that last time price came here close to this, near this it bounced, they tried to close this, but the weekly candle did not close about below it, and it held, right? And what did you do? So this was a failed breakdown, and then boom, it went up, right? So here we've not even touched it yet. So on Monday or next week, what I'm looking at is that we need the best, if they have steam left, gas left in their tank, they need to crack below this level, which is 589, And then if we do that, then we are going to head here, right? And then once we head there, then that means that we are confirming the breakdown. Okay. But if they fail, the reversal is going to be devastating. It's going to be very aggressive to the upside, right? So that's why I want you guys to know. So let me go to the daily here. So even if you look at the daily, we've not even touched the 50 simple moving average. It's not even there. Look at that, right? So if we get a push, so here I expect that maybe we get a small push to the downside, and then we hold here, and then we bounce, right, on Monday. But if we continue and the bears are able to get their way to push this down, then we are going to head here. So the next target of the sell, where the sell is going to end, in case cooler heads don't prevail, is going to be here, right? $540, right? So here, so let me bring my measuring to see where that's going to go to. From here to here is what, 11%. So that's going to give us a correction in the NASDAQ, right? A correction in the NASDAQ. So once we get here, we are now going to bounce, and that is if the sell-off continues. It has not confirmed yet. It's not confirmed yet, right? So if the sell-off continues and it comes down, this is where I'm expecting the short to go, and then we are going to get a bounce, and we are going to down get a rally due to earnings. November into December Santa Claus rally, we make new all-time highs. We close the year on a high note, right? So that's where so as a technician, I always look at all angles, right? I come in neutral. I don't say I'm only bullish or I'm only bearish. No, I trade what the chart tells me. I stay professional, right? You are professional. If you're professional, you don't favor bulls or bears, right? You trade what the chart tells you. Okay. So here, that's it for the QQQ. So now let's go to what I call the leading indicator. One of the reasons why I took shorts this week here, right, was because of DIA, the Dow Jones index. That's the ETF. Okay, so here we are going to do a trend line experiment, like a trend line masterclass. So over here, this is what I had on my chart, right? I had this here, from this area here to here. You got this. So this an upsloping trend line, and then this bottom here became here. We did this one. So here we have this other one. So this is called, in technical analysis, this is called a rising wedge pattern, right? A rising wedge pattern. So rising wedge patterns are typically bearish in nature. So if you look at this, rising wedge pattern is typically bearish in nature, okay? Meaning that it's setting up for a sell, right? And you can see with the SPY and QQQ and stuff, they're also putting in a rising wedge, okay? And over here, we can see that the DIA, you can see that the DIA, what did it do? Why did I say the DIA was the leading indicator amongst all the three indices? So what constitutes the Dow Jones Index? The Dow Jones Index has 30 companies that are legacy companies, right? These are companies that have been in business and are very profitable. Some of them have been there for 100 years, etc. You have Pepsi, you have Coca-Cola, you have McDonald's, you have Walmart, right? These are what is called, for lack of a better word, the boring companies, right? They are very stable, and if there's a recession, folks gravitate, the smart money gravitate towards that, because those are safe havens, right, where you can put in your investment. Or if there's a recession, you have to eat, right? So you have to go to Costco to buy food, right? You don't have a choice. You have to. Those stocks are going to still go high. Okay, perfect. So these companies do not have this AI hype. They don't have the AI, because Pepsi posted their earnings. I think they reported their earnings last week, right? I mean, the stock made a modest rally, like 1%, but it wasn't up. So I mean, so I was saying to my community that if Pepsi had mentioned they were incorporating AI or something into their business, it would have jumped 20% because this market just likes the AI hype, right? AI, right? AI is a great technology. I like AI. I use AI, but it's just causing the market to get overvalued. There are certain stocks that do not be trading at crazy evaluations, right? Yeah. So here, why is this? So here, this is a falling, rising wedge pattern, and I showed you guys that it's a bearish pattern, right? And one thing that I used to say this was a leading indicator was that the DIA, again, this is an example of a failed breakout. Okay. So on this day, on Friday, October 3rd, it tried to break out, but it failed. They brought it back down and it put in what is called a topping tail candle, right? So a topping tail candle, those that have taken our course, like according to Rich's law, you have here, this is a Y state. So if you have a topping tail candle showing up in the Y state, it typically is a bearish sign, but that's not a confirmation yet, right? So a confirmation will come if you get price to break below the base of the topping tail, which is here, this one. So you see the topping tail candle, this is the base, right? The base of the topping tail. So this was grinding, right? It was Monday was grinding, Tuesday was grinding. So I opened a short position here. My stop was here. My stop was above this. I gave it a little bit of room. My stop was here, and then it kept on growing. So this was putting in what looked like this was a bear flag, right? This is a bear flag, right? So tiny, this is a pole. This is the flag. So this area here, this box here is a flag, right? So what I was waiting for was that I was waiting for either if price comes and breaks above this, fine, I'll take a loss, is what it is. But if as long as price has not broken above this and closed, because the candle has to close above that, the high of the topping tail candle, right? It did not do that. So now what happened was that, so this area here, so this open position, startup position, and then once this broke, I added to my position. This was on Thursday, added to the position, and then I just wait, right? Add it to your position because now we've confirmed the break, and then boom, we got the sell-off in the market on Friday, right? So my target for this short was here because why? Because you see, last time price came here, it bounced, right? So again, as a technician, I use patterns. So this here is almost confirmed. It's like 90% is confirming to trade below this. We need another candle on Monday or during the week to close below this level. If we close below this level, then we are heading down on the DIA, right? So the DIA has acted as the leading indicator. So I took DIA puts, I took SPY puts, and yeah, so then I also made a video on Thursday telling everybody that I've opened a position on DIA. So those that took advantage of that and executed, they made lots of money from it. Okay, so this is why technicals is very powerful. Okay, so one last thing I'm going to talk about let me go back into let me talk about another thing here, which is the VIX, right? This is the volatility index. So volatility index is very important. This is the volatility index of the S&P 500. So this is the VIX, right? So if you look at the VIX closely, right, you come to the weekly time frame. You can see that price has always come here and bounced, right? So this is the base of the support trend line. Price has come here and then we got a spike. So this was the Japanese carry trace spike that's caused the market to sell off like 10% in a day, kind of thing. And then it sold off, and then we got this one too. This was Liberation Day lows, right? We got this. This is the weekly. So price has been holding here. So you have this bottom, one bottom, two bottom. This is a triple bottom, right? 1, 2, 3, triple bottom. So anytime, how does the volatility index work? Anytime the SPY is going up or rallying, or SPS is rallying, the volatility index sells off, right? So you see here that the volatility index has been selling off and it has been coiling, right? It has been curving to the upside. And here we have consolidation, right? Those that have taken our course, I'm a big consolidation trader, right? That which is like, I like the concept of consolidation, right? The longer the consolidation, the bigger the move. So here we've had how many weeks? 1, 2, 3, 4, like I can't even count. Many weeks of consolidation, right? And finally, what did he do? You have here, this will happen here. So this is the daily. So I have this trend line. This is a trend line from March 10th, and then it connects to this one on May 23rd, and then this one on August 1st, and this one here. So it goes down, and you can see that what did you do? We got a breakout, right? So anytime this is a wedge pattern, anytime, so it's just like a pressure cooker, right? It goes in up down until finally it breaks out. So here we got that breakout. So currently the VIX is at the breakout zone. And also, if you look at this, so anytime the VIX is trading below like 15, $16, it means that there's complacency in the market, too much complacency in the market, because the VIX was not even moving, because you didn't have any economic data, no news, everything is AI this, AI that every single day, right? And what happened is that now when the slight volatility came, boom, it just sent everything up. So anytime this VIX is up, it means that the SPY is down, and most of the time all the other indices like QQQ, DI, everything is down, right? Because all of them have their own volatility indices, but this one here is the one for the S&P 500. So right now we are at a critical level. Okay, if on Monday or next week we get this to break out above $21 or $22, above $22, this is going to break out and go, right? And then the next target is going to be here, and that's where maybe price can come and store, or it can continue. So if we get that 10% correction that I'm talking about, then definitely we are going to break above this downslope in this trend line here, and we are going to go higher. Okay, so always have the VIX, always look at what the VIX is doing, and always take notes on that. Okay, and finally I'll go through one more chart here to bring this to an end here. I'll go to the go back to my chart, and I'll go to this here. This is SIC composite. This is NDS, I think. Okay, so finally I'll go through this chart here. So those in my community know, in our community, Trading Rich community know, I've been posting this for some time. And when I was posting this, it's not to put fear in people. It's not for fear mongering or anything like that. It's based on the charts, right? The reason, again, once again, the reason why I like the charts is that it keeps things professional, right? No crazy sentiments, no hype, no nonsense, that kind of thing. Is about the charts. What does the charts say? Is black and white. Okay, so here, this is a pattern. It's called the megaphone pattern, right? Megaphone patterns are typically, this kind of megaphone patterns are typically bearish in nature, right? So this is the NASDAQ, this is the NDS, right? And we know that the NASDAQ is the one controlling this market due to stocks like this AI trade, and also due to stocks like NVIDIA, right? Semiconductors. So here I see this here. So I put this chart here. I've had this chart. I've not changed it. It's been there for months, right? So now we have this. So this is called the megaphone pattern. So you see here that we broke above this. So this is also a long trend line. That's from 2024 to this area, and then we extended it. What did you do? We got what? This is a failed breakout. So again, this is an example of a failed breakout. We pushed up, but it couldn't get a job done, and then we are back here. It's not confirmed yet. If it continues going down, then it's going to confirm to the downside. So we have a megaphone pattern. So here, make sure you have this megaphone pattern, use it as a guide. So if the sell-off continues and the US economy goes into a recession, this thing is going to come somewhere here to this area, right? To off the megaphone pattern. So again, so this is very important. So here, this is an example of the megaphone pattern. So if you go here, look at this, look at this. So we have the bullish megaphone pattern and we have the bearish. So what we have there is like a bearish megaphone pattern. So if the US economy goes into a recession, I believe that we are in a bubble, right? I call it the everything bubble. Anytime we have gold at highs and stock market at highs, it doesn't bode well. And in the last 3 occasions, it has caused the market to crash significantly. So if you don't know what the everything bubble is, join our free community and watch the masterclass. So the masterclass is which I did on September 30th, talks about the whole scope and the game plan for Q4 and where the market is going and the future, right? So make sure you watch it. I talk about, so the story is that I talk about the final rally or the big crash, right? So here we have a megaphone pattern. So that's how the megaphone pattern is. So make sure you take notes of this and let the charts guide you, please. Let the charts guide you. Don't just be going on social media and listening to all sorts of things. Where is the charts? The charts removes all the confusion. So over here, I've explained why the market sold off. We knew this was going to happen. It was just a matter of time. I've talked about this several times. I've done master classes. I've done even our YouTube live on Sunday. I talked about DI. That I was going to short DI, right? I talked about it. So this is nothing new. It might be new to some people. Oh my gosh, the market is selling and that kind of thing. So if you look at the liquidation, what happened in the market? So just in one day, right? Just in one day, we got 1.6 trillion dollars wiped out from the stock market. That was from yesterday, right? And in the crypto market, this yesterday's sell-off was the biggest crash in crypto history in one day. It was approximately 20 billion, right? Liquidation in one day. So a lot of people were over leveraged and they got smoked, right? Because some of these guys don't use technicals, right? They just use social media hype. If you're a technician, because I've been, most folks in my community, I've been telling everybody that I'm very skeptical with longs because of where we were trading. I was very skeptical with long. So even in the swing trading service that we have, anytime we take swing trades, I say, guys, I'm like, I'm very taking it easy. I'm not going too big because the market was too extended to the upside and was overvalued. Okay. So please make sure you if you are not a subscriber to this channel, please make sure you subscribe to the channel and also hit the notification bell so that anytime we go live, you'll be able to get our live stream and get notification instantly. Also, most importantly, if you like what you learned today, I want to hear you. I want to hear from you guys. Please type in the comments and let me know what you learned from this, because that's what is going to help me continue making this kind of videos. Because if I'm not getting any comments, I don't know whether you guys are learning anything from it. So just put in the chat one thing that you learned, right? If you want, you can even type 3 things that you learned today, right? Which are going to be something that is going to guide you moving forward. So once again, Trading Rich is all about technicals, data, technicals, right? Everything is technical analysis, right? We let the technicals guide us, and the news and other things confirm the technicals. So no kind of hype. It's no hype, no emotions, no social media noise. It's all about the charts. Thank you very much for watching. I hope you learned something from this. See you in the next video. Bye bye.